Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the Bank of England interest rate decision. Now, before we get started, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So like I said, today it's a Tixee Live watch along of Bank of England interest rate decision. Okay, now we've already had an extremely volatile day with two central banks already, one in particular shocking the market, and that was, of course, was Bank of Japan intervening in the FX market. We also had the SNB today deciding to raise interest rates by 0.75 basis points, so essentially leaving the negative interest rate region. But expectation for the Bank of England is for them to increase interest rates by 50 basis points. There is those, though, out there in the market who are expecting that maybe the Bank of England might be a little bit more aggressive than usual and rate hikes by 75 basis points. That would be following in the step, of course, of the Fed, SNB today, and what ECB did last time. But here's the thing, which I often say, I do feel for the Bank of England because they are really in a rock and a hard place, and they really have to do a balancing act. Because yes, inflation is 40-year high at 9.9%, but they got other economic data which is worrying. Yes, employment is stable at the moment at 3.6%, but there is an increase in the claimant count. UK manufacturing PMI is 49.6, under 50. GDP was only 0.2%. And like I said already, inflation is at a 40-year high at 9.9%. So, though they need to fight inflation dramatically, they are in the UK in particular, they are brinkering on the edge of slipping into recession. So it's a really tough decision for them to make. It's not like the Fed, okay, or the Fed who has more tools in their toolbox and they're happy to push the US into recession because they're happy to do that. The Bank of England is not in that sort of situation or strong enough position like the Fed. But really what I think will happen today will come down to the battle of the hawks and the doves. Because as you know, this interest rate decision is decided by the Monetary Policy Committee, which consists of 9 members. And both these members are sort of split in the dovish camp and the hawkish camp. If we start off with the doves at the moment, you've got Tenero, Cunliffe, Broadbent, and a new member, Deringra, who is all considered to be pretty dovish. And then in the hawks camp, okay, you have Bailey, Hugh Pill, Ramsden, Haskell, and Mann, who's extremely hawkish. Now, I think the other thing which is going to be really interesting today, and I'm going to see if I can find it and read it as we're live online, because it comes out at the same time as interest rate decision, and that's the monetary policy summary, which is released, like I say, literally at the same time as the interest rate decision. Now, last time when the statement came out, everybody sort of anticipated what the BOE did with the interest rate, so it didn't surprise the market. But what did shake the market was the monetary policy statement, which was released at the same time, like I said, because that summary was extremely honest and painted a really negative picture or negative future for the UK. It mentioned about inflation going to 13.2% by October, UK entering recession by Q4, and that really drove the sterling bears into the marketplace. So this report or this policy statement, policy summary, I think is going to potentially be an even bigger mover than the interest rate decision, unless the Bank of England really surprises us. Like I say, general consensus is 50. 75 would be pretty surprising. And the other thing I want to say about the monetary policy summary is because there is an interesting fact that obviously we know the sterling is just bounced off a 37-year low against the dollar. A lot of people are beginning to think maybe the bad news of the UK is already priced into the market. And will this summary, maybe this summary, might show signs of improvement in the economy, which could change the sterling's fortune, so to speak. But there's other central banks and other analysts who are still very doom and gloom on the sterling. And like I say, I'm still pretty bearish on the sterling as well. But many people think if we have a 50 basic point rate hike today, this can't help the sterling. It won't be able to save the sterling. And there's even questions being asked, could even 75, which would be a big surprise, save the sterling today? ING, for example, okay, they're still very doom and gloom on the British pound. They still see it going to 1.10 in the medium to long term. And this is what they had to say about that. They said the hawkish BOE, which is true because the BOE has been hawkish so far this year, had provided little support to the sterling this summer. Instead, fiscal concern is growing in the UK. Like I said, all that economic data is pretty negative, and like I say, is worrying. And they said today's event could prove today's event could prove the trigger for another round of gilt and sterling selling, some more pressure for the sterling. It goes on to say, okay, the British pound is to continue grinding towards 1.10, and a difficult equity environment could see the euro sterling edging back to 0.88. As you guessed it, I'll be watching the cable, British pound, US dollar. I will be watching the euro sterling as well, and I'll be looking at the guppy today, the British pound, Japanese yen. Now, let's go through some potential scenarios, because to be absolutely open with you, it's easy to sometimes to predict or foresee what a market might do. I think with the sterling at the moment, nobody knows how the market's really going to react on this decision. And like I said, I think there's going to be more focus on the monetary policy summary instead. But anyway, here's some scenarios. Scenario one, BOE raises interest rates by 50. The GBP comes under more pressure because the market is disappointed. Scenario number two, BOE raises interest rates by 75. Sterling can get a temporary boost, but then experiences pressure again. Scenario three, BOE raises interest rates by 25. GBP comes potentially under a lot of pressure, because if they did that, then that would be very dovish. Scenario four, monetary policy statement shows signs of improvement. GBP could improve. And scenario five, monetary policy statement shows signs of more decline. Sterling comes under more pressure. So those are some of the scenarios we could potentially be looking at. But anyway, let's pull up the charts now and get ready, because we've got about 50 seconds to go before the announcement comes out. As always, I've got my trusty mobile with me so I can look at the data. And like I say, I'll try and go on the Bank of England website at the same time and read the monetary statement. Now, as you can see, like I said, on the back of Powell yesterday, it was trading below the 112 handle. It has got a boost, and it's not because of the Bank of England at the moment. That's down to Bank of Japan intervening against, in the FX market. That's what's driven dollar weakness. So this is why, like I say, the sterling is benefiting at the moment. But all this could possibly change in the next 15 potential seconds. So anyway, let's have a quick look. Well, before that, let's have a look at the euro sterling as well. Okay, euro sterling's on the move as well already. Okay, we've got 5 seconds. 5 seconds, 5 seconds. Let's go back to the cable. Right, let's get ready. Let's get ready. Come on, let's have a look. Let's have a look. What are they going to do? They surprised us. Slight move higher at the moment. Let's have a look. It gapped down lower. What have they done? What have they done? Come on. No, come on. It's moving lower slightly. This could just be a knee-jerk reaction. The market does this. Let's have a look. Come on. Bear with me. We're nearly there. Come on. Come on. Oh, it's spiking down a bit there. Let's have a look. Okay. Okay. All right. Okay. They've increased interest rates by 50 basic points. 50 basic points. This is why. Basic points. This is why it spiked down lower. So interest rates now stand at 2.25. They've only gone 50. They've only gone 50. And like I say, we now live in the times. We live in times where raising interest rates only by 50 basic points is considered dovish. All those hoping for a 75, well, sorry, your hopes have been dashed. The Bank of England have decided to be what I consider a pretty dovish move. 50 basic points only. And this is where we can see the sterling now back under the 112 handle once again. Euro, what's the wrong pair? Sorry. Euro sterling, same thing. Euro sterling is spiked up as well. So we are looking at scenario one. We are looking at that currently as it stands. So there's the breaking news. Bank of England, inactive, seems still to be on holiday. Has only decided to go to 50 basic points. Right, let's have a quick look at the Bank of England. See if we can get on the website and see what the statement is saying as well, because that could add more fuel to the fire as well. More fuel to the fire. Let's have a look, see if they've got the statement out already. Oh, dear me. Dear me. Here we go. Right. See, let's say, yes, we know you've done that. Okay. Committee sets so like a good big page document. So bear with me, everybody. They voted 5-4. Yeah. What for 50? So it was close. It was close, but this was 4. Let's have a read. Come on. Right. Yeah. 3 members preferred to do 75, according to the report. 3 members preferred to do 75. 1 member preferred to increase bank rate by 0.25, which I think would be even worse, to 2%. The stock purchase UK government bonds. So let's have a quick look at this, bit more of this as well. Yeah, this just once, please. Dear me, right, here we go. In France. Right, what's this? Right, wages are rising more expected, so that's quite good. 12-month CPI fell slightly for, yes, we know this. Where do you see it going? Where they see it going? Employment. Sorry, got to give you a bit of time. I'm deciphering a report here, looking for any bullet points. Yeah. Just under 11. Okay. So they have changed slightly, actually. They have changed slightly, which is pretty positive. They now changed October inflation to 11%. Expectation of inflation now in October to 11%. Okay, a lot better than what they thought it would be. Previous report, where they went 13.2, so slightly lower. They go on to say, sorry, excuse me. Nonetheless, energy bills will still go up, and combined with the indirect effects of high energy costs, inflation is expected to remain above 10% over the next following few months before start falling back. So half a good story, half a bad story, half indifferent. Sorry, I do apologize. Is acting to show the long-term inflation. Yep. It's right. Domestically generated inflation continues. Right. Okay. This is interesting. They said the new government energy price guarantee This thing that the new Prime Minister Liz Truss is bringing into place will lower and bring forward the expected peak of CPI inflation. So they reckon that will have an impact on inflation as well. So that will happen as well. Labour market's tight and domestic cost and price remains elevated. Guaranteed reduces inflation in the near term. It also means household spending is likely to be less weak than projected. So overall, this is not so negative. So it's slightly better news. Slightly better news. Certainly better than the previous report they did, which was really, really negative. Yeah. Compared to lower, yeah. Okay. So anyway, it's a slightly better to dissect that as well. It's a big report, but it's better than the previous as well. But even as it stands, as we can see, sterling's trying to break above the 113 handle. But obviously that's a big disappointment, I think, in many people's minds. Only 50. Okay, the statement is slightly better, but we still have a long way to go before we break this downtrend. Don't forget, you can ask me questions anytime you wish, or simply, say a hi or share me your opinions on the Bank of England interest rate decision. Are you surprised by 50? Are you disappointed only 50 like I am? I am. I used to think the ECB was inactive, was slow to get off the ground. And they are slow to get off the ground, but even they did 75. So, yeah, there we go. Okay. Yeah, I think that was the anticipation they might, because they might try and follow what the Fed did and what obviously even SMB did today and ECB done in previous. Nobody expected them to do 100. I mean, that's asking too much, that is. I like the Swedish bank, Risk Bank did a couple of days ago. So, yeah, disappointing for that. But the market, like I say, the market's going to have to digest that report, because maybe, just maybe, like I say, this bad news is priced in. And maybe if we start seeing positive signs, like they said, they reckon inflation now in October, it's going to be 11%, not 13.2. So that's better. But they do say it's going to be above 10 for the next couple of months. So bit of yin and yang there, good stuff, bad stuff, bit of mixture on that. Is there any questions? Tell me what you guys think. I mean, obviously, the big mover on the headline today has already been taken away from them, and that was the Bank of Japan intervening in the FX market. They've already stolen the limelight in many ways, because that was a really huge mover today. Which, of course, I'll talk a lot more about that later today in my next live, which of course will be at 2 p.m. UTC. If there is no questions, don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will answer the question next time I go live on air. So bear in mind you have that, that option available to you too. So do bear that in mind. So anyway, let's wrapping it up. 50 basic points rate hike. Okay, slightly disappointing. This is what the market did consider they would do, but there was a bit of hope out there. They might do 75. They haven't done 75. But on the plus side, monetary policy summary is slightly better. It is slightly better than the previous one. So it's not so doom and gloom completely. But as it stands, the sterling is still struggling to maintain momentum above that 113 handle. Let's see if it can try and break above that as the market digests that monetary summary. Let's see if they can digest it. Anyway, if there is no questions, not to worry. If you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and interesting, and you put up with me, my over-the-top enthusiasm, now simply give me one of these. It's nice to know that you like what I do. I can see I've got a few likes already, which I really, really, really appreciate. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.